question going into this week are we going to start cutting rates because of the worries of what we're having with these banks? And that's going to be a little bit of the premise of today's video, going into some key levels here on the chart as well, what we need to be watching on indexes. We covered a lot of that in the video from Friday, but I want to focus a little bit on what's happening, deep down in the market right now. Now, if you are unfamiliar on Twitter, I did just post a decent little thread going over this, and I did take a screenshot of an article. I'm going to go over this here in the video, but we have a lot to talk about here in depth. Now, before we get into that, I ask you to do two things. Consider liking, consider subscribing. You're trying to learn every single day, as you can see here. I'm making videos for you so you are prepared, unbiased, to the point, going over how the market's moving, what I expect, and on Saturdays we do educational videos going forward. Also, the newsletter will be released today. If you are not on the newsletter, you want to be on it, it's completely free. We have a chart, we have everything you need to know about the market when it comes to futures, key targets that we're looking at on the futures, and then stocks that we're liking as well, giving you anything and everything that we have. And then if we ever have any type of discount code for any one of our sponsors that they've run a special, you'll probably be able to find it there. But typically, we're not trying to sell you anything. This is a copy of the newsletter for this week, so make sure you check it out. Now let's get back into it. So for a few things, and what we're going to talk about real quick, I want to go over SVB just for a second. I'm not going to go too in depth in this video, but I just want to talk a little bit about it. So the SVB situation, I was talking in Discord yesterday, and someone brought up a very interesting statement. They said that at SVB, they had a pretty large increase of business from 2019 into basically 2021, 2022, right? Specifically from 2020 into 2022. And if you remember, basically the market was only going up. If we look back at the market during that time period, I mean, it makes logical sense, a monthly time frame. I mean, you can see from 2020, we go from those COVID lows, and we essentially go over almost 200% to the upside from COVID lows, right? And then we're here now. When you look at that, it makes sense. It makes sense that they were seeing a lot of deposits. It makes sense that they were receiving a lot more money. So what you see here from 2020, they got 70, and by the time of 2022 come around, you're at 198 billion. So you can see it's definitely just snowballing here. Now this was the issue, and I just highlighted this because it was like the main part, and I don't want to ever overdo something for you guys. I want to just make it easy so everyone understands it, doesn't ask crazy questions. So basically what they were doing is they were getting all this money, and it made sense what they were doing. It was actually probably a semi-responsible thought of what they were doing. So they get all this money, and they're like, we're not just going to just let it sit here. We're going to throw it in bonds. And so they started buying long-term bonds, and this was the mistake. So SVB's mistake was investing in longer mortgage securities with more than 10 years to maturity. And they're buying them at a 1.6% rate. So they were going to grow over time. You're saying, well, that doesn't sound like a bad idea. And it doesn't, right? You're growing on that amount of money. It makes sense. It's the smart thing to do. It's not very risky, and 99% of the time. However, when you know that inflation is a big issue, and I have to believe that they understood that we were going to have to start raising rates because of what was happening in America, I have to conclude that you don't buy the long-term bonds there. So what's happening now is you're at 1.6% where they bought them, and you can currently buy these 10-year bonds for at about 5%, or even 5-year bonds at over that, right? And so no one's going to buy this from them. There's not a buyer in the market for them. So what they would have to do is sell at a loss, and they would not be able to wait till maturity, and they just don't have enough time there. And so that's where they're at now. And that's the major issue that they're facing. And I have a whole article. I posted it on Twitter, so you'll have it. But that's the really big issue. And to point down a little bit further why this was such a big issue, and we've talked about this extensively here on the channel, extensively. This is like the 2-year bond chart. I'm going to go over this a little bit more in depth, but you can see from 2020 to in mid 2021, you can see the 2-year starts to spike really quick. The 5-year chart is a little bit more terrifying, right? Because you go through 2020 and you're down, and you're staying sideways, which is what you would like to see on the longer term, or to side with the longer term. But then you get into 2021, right in the beginning of 2020, it should be 2021, right at the beginning of January, you go crazy. Okay. And then we see obviously the 10-year starts to pump up as well, right? So this is actually the inversion chart. But you see the 10-year starts to pump up also, but you're locked in at those points, right? So typically, right now would be a great time to be buying these bonds. Like the 5 years are fantastic when you're at 4.4%, or the 2 years when they were at 5%. It's a great time to buy those, right? It's a great time because you're guaranteed that money, and in a few years you're able to lock those in. And awesome. Great. Now, where they're at, there's some major issues, and they probably should have cut that trade way back here, but it is what it is. And maybe they blame the Fed, and who knows who they blame. So that's what you have there. But the biggest thing here was what Warren Buffett was doing. And I've said this a million times. When COVID happened, Warren Buffett, he was done with US bonds. He said, I'm not going to buy any stocks. And if you look from 2020 till now, basically the only names he's bought, and I actually failed to mention one, is Apple. These are equities. Apple, which we all know Warren Buffett notoriously owns so much of Apple. He makes millions and millions of dollars from the dividend. Then he also bought ATVI, which was basically an arbitrage play because they're going to get acquired from Microsoft. So he's going to make money on that no matter what, because they're getting acquired at $90. And I think they're like, he bought it in at 60 to 70. It was guaranteed money. And then number 3 was TSM. Two of those, Activision and TSM, could be considered really short-term trades. Activision, he's held it for longer, he's already said. But TSM, he held for like 2 months and already got out of it. Besides that, he bought oil companies, right? He flat out bought out what happened with Dominion. He owns that company now, at least primary share of that company. Then he started buying into Oxy, which now he can own. He can be controlling shareholder if he wants that. He has permission there, right? But his biggest bet of all was in Japanese yen bonds. And this man went crazy. Him and Charlie Munger, they got at the dinner table. They got the family. They said, look, get everything from the bank accounts. We're throwing it into the bonds. And they did. And then over the course of this year, 2020, previous year, 2022, he started getting rid of all of his bonds. And he kind of became a little bit of a swing trader, right? And so that's what Buffett did. He started selling all those. He made a lot of his money. He killed it. Congratulations, Warren. You're awesome. You did it again. The best to ever do it, right? And so that's what happened. But there was so many indicators that the long-term yields were not the way to go. And Buffett had a pretty good idea of this. That's why we continue to talk about Japan's market, because if Japan starts to bleed and starts to show pain, then we know there's some real worries out there. That's why they consistently just stay at the same levels on their bonds. It's such an attractive market for investors to go into. Now, as we go into like the 2 hour, we're gonna start looking at some of these levels that we've been watching. We have these posted on the Twitter, so you have them all there. Now, in my opinion, these are just levels that I'll be watching over the next few days. There's gonna be a lot of speculation going into the next week. I'm gonna tell you right now. People asking me out there right now, Tyler, do you think we're gonna cut rates? I don't think we're gonna cut rates this year. I just don't think it's gonna happen unless we start seeing bank after bank go under. Do I think there's going to be a bailout? I don't think so. I do not think there'd be a bailout this early on. Personally, my opinion, this is all opinion based. This is because I know you're going to ask that in the comments. So I don't believe a bailout's going to happen. I don't believe we're going to cut rates this year. I still think they're probably going to raise rates at the next meeting. I think they have to. If they don't, there is a major possibility inflation could become entrenched. We are at a very big crossroads, if you will. So if we look at the NQ specifically, we'll go into ES in a second. You're at the weekly 200 moving average coming up very quick. This is my target, obviously, for this week. Basically 200 points of downside roughly on the Nasdaq, which really isn't that bad. High possibility we could hit this tomorrow on Monday. And then if CPI and PPI report bad, then obviously I expect the bleeding to continue down quickly. And I think if CPI comes up bad, you're going to quickly come into the next demand. And then obviously 52-week lows are down there. Now ES, very interesting here where we're at. We've already came basically into this massive level. Now it's a really big area to consider demand because it's on the daily, but nonetheless, like I still consider it there. Roughly like 3860 all the way down to 3800 flat almost. Huge level. You get your weekly 200 SMA there as well at 3722. So I definitely think there's a lot that we have to be watching and be prepared for, but you're definitely breaking the higher low trend that you had. You can also see that bump and run that we did get of this level as well when you come in here. You can see we broke trend, came back, tried to retest, actually tried to mount and then pushed back down, showing the big signs of weakness in the economy and the market. So I don't love this. Very weak. ES actually looks arguably worse than the Nasdaq right now, specifically at the end of the week. Now, the next thing I want to talk about too is some of the ETFs we need to be watching. So a lot of people are focused on XLF, which is the banking ETF, right? This is the big banks like Wells Fargo, Citigroup, JP Morgan. Now, I believe the big concern are regional banks. I think that's where we need to be watching and being concerned with is the regional banks, right? And that's going to be KRE. But before we talk about KRE, and I just want to pop this up so I don't forget, XLF is approximately, I think, 11% of the SPY. I want to say it's around 10 to 11% total of the SPY. I'm going to tell you right now, this is kind of the joker, the one little push that could get you off the market and get you hurting down here. And that's the big concern for me. XLF, if we look here on the daily, pretty tough to be watching right now. You could argue you're having a massive bear flag kind of playing out here. But when you take a better look at something like Wells Fargo and some of the big bank names, I think the bear flag's a little bit more clear and you're trying to break below it now. But you have some really big supports here. So I'm not going to say right now, and people keep asking me, should I go short on banks? It's never the time to go short when you get a flash crash. That's never the time to start hammering the short button. You're either in on the party already or you're sitting on the sidelines. And I'm one of the people sitting on the sidelines on these banks. Now, there's a lot of other plays I like that I've been playing and I mention every day in the videos. But again, that's the concern here. If you're interested in banks, I'd be watching KRE more than XLF. I think better money-making opportunities here. I think a lot of regional banks will get slapped and will be in danger specifically. Now, the area that I think has the most risk from where we're at right now is SOXX, semiconductors. Semiconductors, and I'm going to keep saying it, you remain at highs. You remain with higher lows, and you still look okay. You really do. I believe this is the area of the market that if this starts to roll over, you will immediately see pain in the market. You will immediately probably, if SOXX breaks down, I believe you'll probably make 52-week lows on the ES and the Nasdaq really quick. I think this is one of the only areas that is holding us up. I think it's the strongest areas, obviously, of the market. We can look at NVIDIA and AMD. They've been on massive runs, and I think this is the biggest thing right now. Okay, I'm going to continue to say this right now. I think it's the biggest area. NVIDIA obviously more impressive than AMD, but that's my opinion here. And that's where I am sticking to. If SOXX rolls over, I think it's almost clear and evident that you will see new 52-week lows. If we look at where we established 52-week lows, even in the first place, it was primarily because we saw NVIDIA and AMD change outlooks to a more downside approach, right? And that's when you started seeing a lot of pain hit the market. Whereas back here in October, flash back to NVIDIA. That's when they changed their guidance, right? Go look back at the information in August. They changed their guidance, and you just saw a flash crash basically from 192 to lows of 109. Probably one of the best buys of the year if you bought down there. But I'm just saying it timed perfectly with the indexes as well to see when their 52-week lows were made. So I think you have to be watching there. A little bit of a step further, we look at Dow. What's happening here? Dow's been one of the big strengths of the market. It's definitely been holding us up. Okay, even with some of the downturns that we've had, you've still really held the trend. Not so good anymore. Dow's definitely been spiking towards the downside. The 200 SMA is getting, still got 2,000 points almost to their 1,400 points. So I don't love it. I think there's a lot of pain. I think that this is not ideal either. So I'd definitely be watching what's happening here on the Dow. That's my opinion of this specifically and where we're at on indexes. And I don't want to spend an extensive time focused on this, okay? There's not too much to talk about because when we look at this, it's all going to come down to what is said by the Fed, which this whole week is a blackout period, so nothing will be said by the Fed. What is going to come out of this data? What is the Treasury going to do? Are they going to do a bailout? Which again, I don't believe so. But what's the possibility there? Is someone going to acquire SVB? Because if they don't, then we're going to see immediate rollovers into the rest of the market. Just like we've seen Roku come out and say they have around $500 million stuck inside SVB, of which I think 30 million is what's insured. So now you have this major liquidity issue with probably a lot of banks now. are probably a lot of companies, small startups, right? And so that's the question here. Then you have to look at what's happening with the crypto markets. USDC won't even disclose how much equity they have sitting inside SVB because they don't know the repercussions, right? They don't want the flash crash to happen, which in my opinion is a giant short signal if you're looking at, the stable coin, but it's my opinion what's happening there, right? Do your own research, do your own DD, but this is definitely unfortunate. I don't see how this does not lead to significantly more downside. I'm not happy about the bear case. I'm not happy that this is happening. It's unfortunate. It is the process we expected was definitely unemployment to rise. But you have to understand, and I don't think it's important. I think it's important that we know we should not gloat in what's happening if you're on the right side of this trade, because ultimately it will not be investors that suffer from this. It will be normal people that you see every single day, family members most likely, that will suffer the most from this. It will not be big money most likely. We'll see a handful of people that will be like your sacrificial lambs, but at the end of the day, it'll be normal people that are heavily affected by this, and it's not ideal. I don't see a path for a positive outcome either. When we look at where we're at right now, I think you're going to have to, like we compared it to child labor before. I think you're going to have to deal with the pains. And it's just a part of coming out to the other side. And I think that's the only path going forward. I'll have more updates coming out, more stock updates going into tomorrow. So far, my favorite play right now is AMD. And it will continue to be my favorite play towards the downside, just based on risk to reward. I love NVIDIA as well. I think NVIDIA is just a little bit of a riskier asset. Tesla did us very, very good. Wells Fargo also dropped really nice for anyone that got into that one. More updates are coming. Have a good one, traders.